Hi there, thanks for joining me here on Scotland FX. My name is Stuart. I just wanted to go over a trade that I had put on my Telegram. I thought I'd do the video explaining why I took the trade. Although if you've seen my last video, back testing my number one strategy, if you've watched that, you'll see exactly why I've taken it. But I thought I'd go over this particular trade. There's only one trade yesterday, only one that seemed to meet all my criteria, so I took that trade and it turned out to be a winner. So if that sounds good and you want to see more, if you would do me a solid and click the thumbs up, give this video a like and subscribe to my channel so you can be kept up to date as and when I release more videos. Right, so with that being said, let's have a look. This is my Telegram, posted yesterday, so you see one at 9:17 in the morning, and then again it closed the trade at 12:01. So really the trade was just open for 3 hours. It hit my take profit. I was risking 1.5% of my capital. The trade itself, normally it's a 1 to at least a 1 to 1.5, 1 to 2, often a 1 to 2.5. It just happened to be a 1 to 1 on this one, and let me show you why. So this was the trade setup here. We were obviously in an ascending market, a bullish market. The 20 is well above the 50 and they're both on an uptrend, angling up nicely. We see the 20 and the 50 coming up to the price action area, which was right in here. I didn't bother drawing the zone, but it was right in here, around about these wicks. So I was aiming for a pullback from this level back down to this level. Now, to help me draw my zones, I use the Fibonacci. So Fibonacci retracement from this low to this high here, and obviously see it came back, and the 61.8 was at the top of that wick there. So to be honest, I was a bit skeptical whether or not it would come back far enough to trigger me in. My opening is slightly above the 61.8, but if I draw a zone, my zone would have actually been from the top, slightly above the wick to slightly below the wick. So it would have been right in that zone. So really worked out nicely. Because of that, I was happy to put in 1.5%. So that was at the start of the trade. I got triggered in when this candle dropped right here. It triggered me in, and you see there's almost no drawdown at all on this trade. Very quickly, this was on the 15-minute chart. Very quickly, if you know, literally I took the trade, started watching it, and it jumped up when I just remembered to take a screenshot. The reason that, obviously, if you watched my my previous video, was talking about the 1 hour backtest and the 1 hour, my best ever strategy. Typically in the past I trade 4 hour. I find that gives me better results and less volatility to worry about and spikes in the market. However, in saying that, I would normally look at my 1 hour for entry on the 4 hour chart. Because of FTMO, which I'm not doing yet, I've adopted this strategy down to a lower time frame, and I'm live testing it out this week. I'm looking at 1 hour for direction and trade setups, and I'm switching to the 15-minute for entry. That let me see, for example, we came up here, we had a clear break of this level here, a real nice rise up from the level, coming back down, we had some space on the left. I like to see some emptiness. If it's just wick, it's very hard to enter on that. Looking on the 1 hour, it literally was, you know, wick. So I switched down to 15-minute to give me a cleaner looking entry. Got triggered beautifully into that. So that was just after 9 o'clock. And here we are at 12, where were we, 12:01. So you can see, you know, almost got there a couple of times. It came back down, never went back into loss again, stayed in profit, and eventually came up. And this wicked up really high, caught my take profit, and stopped me out. Took the take profit to close the order. So I made my 1.5% on a 1-to-1. This is an almost exact 1-to-1 risk to reward ratio. Now, often this is, if I was, you know, targeting the wick, for example, that might be a 1 to 1.5. If you've got I typically target the high body rather than the high wick. I find that's more stable, and you see it worked out beautifully there in doing that. Now, in saying that, I get people asking me, you know, why do you only target here? You know, if you're on an uptrend, you know it's going to break. Rather than say targeting this, you know it's going to break it and break higher. But what if this is the top of a trend? You know, if how do I know that this is going to keep going up? I don't. For all I know, this could be the top right here, and it's going to start coming back down. And what do we normally see, or what do we often see at the top of a trend before it reverses, is a double top. So if this was to form a double top and it come, you know, there's the one top, comes back down, there's the second leg of the M, the double top, you typically is going up to the similar sort of value before it then breaks down low. So, you know, for me, it's just another way. If I, instead of aiming higher, and if it ends up being a double top and a reversal, I'm going to get stopped out. But you know, if I can aim, if I can get this at least on a 1-to-1, 1.5, 1-to-2, hit the double top before it reverses back, then it's still a winning trade for me, rather than aiming, you know, way up into the stratosphere. So for me, that just gives me a higher percentage win rate as well. So that was the trade I took. It turned out to be a winner. It grew my account by 1.5%. I was risking 1.5 on the stop loss there, and it was a 1-to-1. So that was the trade I took. As you can see, it's in my Telegram here. 9:17 I took the trade. It was a wee bit before that. It was like 9:14 or something, as I said. And then literally I took the trade just as I had a pending order, and I took the trade beautifully, hit my pending order, triggered the order, and by the time I actually took a screenshot, it was literally a couple of minutes later. This is where we were at that point. So it was worked out to be a really nice trade, went exactly in my direction, which was great. So let's have a little look at where we were yesterday at that time. So let me just pull up that chart. So this is the chart here. Now you can see, to be honest, you know, me aiming for the top of the body, candle bodies rather than the top of the wicks, worked out beautifully. And why I'm not aiming up here anyway and going for like 1-to-3, 1-to-5, I always aim, you know, from wherever I enter, I'm aiming for the top of the last previous high, the candle body high, and my stop loss is 30 pips. It's always 30 pips. So there's my 30 pip stop loss. I managed to get it was like a 1 to whatever that is, 1 to 1.07. So where was that? There we are. So you know, and you see effectively we've not broken that yet. In fact, if anything, you can see we're coming back down. Although it's coming back up now, we're back in that range. And unfortunately, I never had an opportunity to get back in. Well, it looks like there might be some opportunities coming up very, very soon. Looking at this, let's have a wee look where we are at the moment. Right on the 38.2. Nearly pulled back to that. You could see a pull back to that and then a rejection if it's going to continue to the upside. But you see here, if I had been targeting, you know, 1-to-5 or something way at the top, 1-to-4, you know, and not aiming for just the previous high, there's a good chance. Yeah, I would have been stopped out eventually. I would have been stopped out over here if I'd let the trade run that long. So for me, that works well. So rather than, you know, setting my take profit up here or something and saying, oh, let's get a, you know, let's get a 1-to-2 even. There's a 1-to-2. So you aim for a 1-to-2, and then eventually I get stopped out. I have a higher percentage win rate when I aim specifically just for the candle body high. So just the candle, just the body of the candle, not the wick, the previous high. And you know, often this is a lot more. Often these are higher. I'm getting a 1-to-2 or 1-to-1.5, whatever. Anyway, this happened to just be a 1-to-1. But often, you know, I'm getting better odds than that anyway. So for me, it was a good trade. If that had been slightly higher and offered me like a 1-to-1.5, a 1-to-2, then I may have gone in for 2%. But I went for 1.5%, and as it turned out, that was really, really nice. So yeah, that's my trading strategy. That's the trade that I took yesterday. You see, there's another nice example here on if I'd been around for the down trade. You know, if we're looking at that, it came right back. I mean, look at that, right to the top of that wick, right to the 61.8, which was level here with this price action. If I had been around to enter this, and I wasn't, I was busy. You know, even let's draw a zone. You would draw a price action zone. Looking back here, you probably draw your price action zone in around about this level like that. So then I would have set a pending order looking like it would come back to the 61.8. So I would have set it's just at the bottom of that zone, as I said what I do. I would have set at the bottom of the zone. I would have set my stop loss at 30 pips. That'll do. But saying that, would I have taken this actually? Would I have taken this trade? No, I wouldn't have taken the trade. I thought it would have worked out. I wouldn't have taken it because I wasn't getting at least a 1-to-1. A minimum 1-to-1 looking at the last body high, so there's not enough movement in price. Although obviously you could say, oh, that would be a great trade, you get a 1-to-2 risk to reward, but the truth being told, that's not the way I trade. I trade, if I'm going long, I'll look for the previous high. If I'm going short, I'll look for the previous low. And it's not even the wick. It's, even if you say the wick, I don't think it's a 1-to-1 up. So I would have been aiming right in about here. And I would have looked at that and thought there's not enough risk to reward ratio there for me to take that trade, because I'll need at least a 1-to-1. This was only a just, only because I looked at this and thought I can at least get a 1-to-1. I took that trade. I wouldn't have taken that trade. Although it would have worked out, it would have been fantastic. You could have easily, made 18 pips on that. But I'm not going to risk 30 pips to make 18. So to be honest, I wouldn't have taken that trade. I'm just saying, looking at how the Fibonacci works and looking at your zones, it does actually work really, really well. This is a good trading system. Unfortunately, there wasn't just the movement needed in that here. Absolutely, there would be. Looking at this here, what we're looking at, this would be your price action zone in here, right back at the 31.8. Looks perfect. To be honest, I would have been triggered in there if I had been around for that. You could have got in there, but just say like now I've missed that. So what would I be doing? I'd be setting my my pending order just to the top of my price zone. Make sure I've got at least 30 pips on that. 30 pips, that's just through, in case you've not seen this is just through my back testing. I have been backtesting the strategy for and using the strategy for years on the 4 hour, and normally to have a larger range, normally at 60 pips. On the 1 hour, I did a bit of backtesting and it looked like 30 pips was, you're not getting stopped out unnecessarily. It comes down due to, obviously, if you're looking at this area, this is going to be a lot of there's got to be a lot of liquidity in this area for institutional buyers to get in, people getting stopped out. So I set my stop to make sure I'm not getting stopped out prematurely, but not so much that my order size would be just too little to actually, if you've got a 400 pip stop loss, you're not getting stopped out, but you're going to take a lot size of 0.01 instead of taking 2 or 3 full lots. But you see this for example, just say it's not retracing back yet, so you can't actually set the fib, but just say this was in fact the top and it started coming down. So I'd be aiming for the previous high, which would have been there, and you see I'll get a 1-to-1.5 on this, risking 30 pips. And this is looking nice as well. Got the crossover, the 20 is above the 50, the 50 is in the price action area. So if this were to come back up, and it's a strong area, had been looking at this, it was strong resistance. Even if you go back, you can see there's probably price action in all around there. That's on that same, look right back here. So it's a key area for price action. So I'd be happy to again probably do 1.5 to 2% on this with a 30 pip stop loss. And you can see now you'd be getting at least let's take it up. You'd be getting at least 1 to 1.5 if this was to start coming back now. A little bit below the 38.2 now, which is good. Ideally, I want this to rise a lot. I want this to come, I like the price to come, way up here and then retrace back. And this 61.8 level here, if it was now the 61.8, would be a much stronger entry on the 61.8, and I'd probably be prepared to risk 2% of my account, aiming for again, if it was a way up here, you can see, imagine you got in, at this level. You got if this is where it started to retrace back, so this is where I would have drawn my Fibonacci there, and it did retrace back all the way to the 61.8, which was the last sort of price area. You could look at this potentially now as a price action area. Maybe have to watch this if this was the new low, but here you'd be getting a 1 to 3.5. But even if I take it as this as the previous low, if it came away up here, for example, again, it literally depends how high up it comes. You could be looking at this now as a price zone to be considering, and you know, you just don't know until you see how far up it goes. But anyway, that's my trading strategy in a nutshell. Probably didn't explain that very well there, but yeah, I just thought I would show you how that trade played out. You can see why I typically aim just for the most previous high, and not the wick, but I normally aim for the candle body top, because if that had been, you know, if this was a double top, it's come up, it's come down, it's come up, trend reversal, breaks down. But if you aim for the candle body top, I often find if this is forming your double top, you can still win a trade, even though you might be at the top of a price reversal, trend reversal. So that's it. That was my trade that I took, and I'll leave that there. I just thought I would do a quick video to show you guys the only one trade I took yesterday. I ended up being quite busy yesterday. There were probably a few trading opportunities in a few of these pairs, but I only had time in the morning. I saw that set up, it looked perfect, and I took it, and it worked and gave me 1.5% reward on capital, with a 1-to-1 risk to reward on that trade. So it worked out nicely. So I thought, and as you can see, I did in fact put that on my Telegram yesterday, so it was a real trade. This is not just hindsight. This is a trade I took live and stuck it on my Telegram. So if you're not a member of my Telegram, if you look at my previous videos, you'll see a link to my Telegram group. It's a free Telegram group. I'll do the same on the description of this video. I'll stick it below this, and as I take trades live, I'll put them on and explain also why I took them. You can see here why I took this trade. I took this trade about 10 minutes ago using the 15-minute for entry, clear break and retest of the 1 hour level and the 61.8 fib, 30 pip stop loss for a 1-to-1 risk to reward trade. When I took the screenshot there, it was currently in profit. Let's see how it plays out. That was at 9:17 yesterday morning, and at 2 minutes past 12, I closed the trade. Well, it closed itself. I hit my take profit. Take profit hit for 1 hour because it was a 1-to-1 risk to reward. But I was risking 1.5% of my account, so I made 1.5% gain on that. So I will be doing that, you know, just releasing these trades. If I see any suitable trades, I'll screenshot them in real time, stick them on my Telegram group for you guys to look at and follow along with as well. So that being said, I'll leave that there. Hopefully you've liked this video. If you have, do me a solid, give this video a thumbs up, like the channel, and subscribe to my channel if you haven't done so already. I am a small channel, just starting out, and it'll help me grow and keep, you know, spurring me on to provide more content like this to you guys as well. So thanks very much. I'll leave the video there. Take care of yourselves, and I'll catch you on the next video.